All right, today we're going to break down a really bold call from Goldman Sachs on a company that's right at the heart of the AI chip wars. We're going to unpack exactly why one of the world's biggest investment banks is betting so big on the Chinese AI chip designer Cambricon.
So here's the big question, right? Why on earth did Goldman Sachs suddenly jack up their price target by a whopping 50%? I mean, in a market this competitive, and let's be honest, geopolitically sensitive, a move that big, well, you've got to take a closer look.
And this is the number that kicked it all off, 1,835 renminbi. That's up from just over 1,200. Look, this isn't some tiny tweak, it's a huge statement of conviction.
And for investors, that new target suggests a potential upside of nearly 48%. So what in the world is driving this massive bet on Cambricon's future?
Okay, so let's get into it. Let's unpack Goldman's thinking here. Their entire case is built on three really powerful, interlocking ideas that they believe are going to fuel Cambricon's rise.
So here's how Goldman connects the dots. It all starts with a massive spending boom from China's big cloud companies. That spending spree then forces a strategic move towards local suppliers like Cambricon, which in turn fuels Cambricon's own huge investment in research and development. It's a feedback loop.
Let's start with that first piece, the absolutely explosive growth in China's cloud infrastructure. This is the kind of rising tide that lifts all boats, but especially the companies making the chips.
And if you want to get a sense of just how big this boom is, get this. The report points out that Tencent's capital expenditure, that's basically what they're spending on new gear, it shot up 119% year over year. And believe me, they are not alone. This spending frenzy is happening all across the board. We're talking ByteDance, Alibaba, Tencent, Baidu, they're all in. And all of this new infrastructure needs one thing above all else: thousands upon thousands of AI chips. This demand is the very foundation of Goldman's entire forecast.
Okay, now let's move on to the second pillar of their argument, because this is where it gets strategic. It's not just about needing more chips, it's about which chips they're buying.
For years, this market was pretty much dominated by just a couple of big non-Chinese players. But the report points out that relying on a single foreign supplier comes with huge risks. Think about tariff uncertainty, data security. It's a headache. So these Chinese cloud companies are now actively looking to branch out. They want a dependable, local option, and that is exactly the role Cambricon is stepping in to fill.
And hey, this isn't just some theory, it's really happening. For instance, the AI company DeepSeek actually customized its latest model to run specifically on the next generation of local Chinese chips. The software world is already adapting, which creates a built-in market for what Cambricon is selling.
And that brings us to the third and final piece of the puzzle for Goldman's optimism. See, Cambricon isn't just sitting around waiting for customers to show up. They are pouring money into making sure they're ready.
Over just the next 3 years, the company is dropping a staggering 4.5 billion renminbi. That's about $628 million straight into R&D. That's not just an investment, that's a war chest for innovation.
So, what does a number that big really mean? It's a powerful signal of the company's own confidence. They are betting on themselves big time to develop the cutting-edge chips and software to compete not just right now, but for years down the road. So, you've got a booming market, a strategic shift working in your favor, and a massive R&D budget. Put it all together, and how does that translate into actual numbers? Well, this is where things get pretty dramatic.
Just look at these projections. Goldman sees AI chip shipments exploding from about 143,000 units in 2025 to over 2.1 million by 2030. That is an insane growth rate, over 70% compounded every single year. It's an exponential curve built on those three drivers we just talked about.
And more shipments, well, that obviously means a whole lot more revenue. Because of this, Goldman has had to completely revise its forecasts upwards. They've bumped their 2027 revenue estimate by nearly 5 billion renminbi. They're basically saying this is going to happen faster and be bigger than they first thought.
But what if everything goes perfectly? Well, the report has what they call a bull case, their best case scenario. And in that world, they see a share price of nearly 4,000 renminbi. That's more than double their already upgraded target.
Okay, but it can't all be good news, right? Of course not. No investment story is complete without looking at the risks, and the report is very clear that this high growth potential comes with some major hurdles.
So, Goldman flags 3 main challenges. First, there's geopolitics. Canbercon is on the U.S. entity list, which can make it hard to get the advanced components they need. Second, there's execution risk. Can they actually deliver on all these ambitious R&D promises? And third, the competition in this market is absolutely brutal. Which leaves us with the ultimate question, doesn't it? Canbercon is sitting at this wild intersection of incredible opportunity and really intense risk. You can clearly see the path for it to become a dominant force in China's AI future, but the geopolitical and competitive headwinds are just as real. Which way it goes will be a defining story in the global tech race.